It's a brand new year on its own. It has its own challenges. What's the outlook for this master plan?
I think the outlook is very good. What we're going to do is we're going to concentrate on some of the initiatives that we're not able to complete in 2016 to now drive them in 2017. So, for instance, this market has been calling for a review of our laws, CAMA, the Investment and Securities Act, FRSC, the warehousing bill, and what have you. Again, last year we set off three committees, one headed by Chief Anthony Idibe, the second one headed by Dr. Ajibade, the third one headed by A.B. Mahmoud, all of them SANs. And they finished their work within a period of 5 months. They locked themselves in a hotel for 4 good days and came up with this report. Now, again, the major game changer in that report is at the discussions level, you had a representation from the regulators, from the SROs, and from the operators. This is the first time a committee is being set up to review laws. And you have the regulators in the room, you have the SROs in the room, and you also have the operators in the room. They've come up with a report, a very robust report, a very game-changer report that, one, would strengthen the regulatory powers of SEC. 2, some of the issues that people are complaining about, certain provision of CAMA, have also been recommended. Currently, those reports are on our website, and we're inviting people to go through and make their comments. By the end of this Friday, the deadline will have lapsed. Our intention is we'll collect those reports and begin to engage the National Assembly. Happily enough, based on our engagement with the National Assembly, they have shown willingness and commitment to assist the capital market in reviewing those laws. So in 2017, my focus is within the first quarter, we should be able to get those laws before the National Assembly. We're also working towards getting some companies to be listed. From the engagement that took place last year, we're expecting between 2 or 3 companies to be listed on the exchange. We're also talking with CBN in terms of unified licensing model. Again, this is the first time that we're going to have it in this market. And one of the issues that we have in this market is the brokers do not have access to liquidity. Now, we've engaged CBN in allowing some of the brokers to have access to their discount window. All we want from CBN is to define what sort of assets those brokers should carry in their own books. We believe it's a very good initiative. We had the first discussion with CBN, and they provided a lot of inputs. We have looked at those inputs. We have represented our proposal. And so the engagement is also going to continue. We also expect a lot of participation from the PFAs. Some of their rules that are yet to come out, we expect that the moment the board is constituted, it will be approved. We also expect a lot of work from the infrastructure side. NSIA is doing quite well. The Nigerian Sovereign Investment Authority, in terms of collaboration with the Guaranco, providing infrastructure guarantee and whatever. So we think 2017 is going to be, is going to have a lot of activities, and hopefully, it will impact positively in the market. From the prediction of economists, by the end of the second quarter, we start to notice some positive GDP growth. So we are very optimistic that 2017 is going to be quite good.
Let's talk a little bit about the infrastructure. You talk about the NSIA, but again, the Ministry of Environment was thinking about green bonds, for example, for the environment. Have you been part of this discussion so far? Can you update us on this?
Well, we've not been part of the discussion on the green bond, but it's something that is also on our table. And we've had a discussion with the CEO of the Moroccan Securities Commission. They have a very comprehensive rules on green bond. They have suffered issue about 3 green bonds. And based on my discussion with her, within the first quarter of this year, we're going to send some of our staff to Morocco to understudy some of their rules and the issuance process, so that we can also come up with our own rules with respect to the green bond.
In terms of the folks at the grassroots, and you did quite across the country tour in 2016 with Islamic financing, getting people to understand more about the market at the grassroots level. How much of what you did in 2016 was successful? What are you planning again as roadshows in 2017?
We didn't do any impact assessment to know, how successful it was. But our intention now is to go to other zones that we've not been able to attend in 2016, and also largely to call on other capital market participants to also engage in those roadshows. We have also been saying that you don't allow or you don't leave public enlightenment strictly at the doors of the SEC. is for the entire market. The market is owned by the operators. The responsibility of regulator is to provide the enabling environment. So part of our engagement with the capital market operator is to tell them that you should also, be on the vanguard of encouraging people to key into some of these initiatives. So what we have for 2017, we've identified 2 or 3 states that we intend to visit. But like I said, we have also called upon other capital market operators to also participate, in this venture.
In the last 1 year, it's been a little bit less of information and news about the commodities exchange. Where are we as far as the NCX is concerned? What plans are being made? Is it privatization with the warehousing receipts that was launched about 2 years ago?
Well, unfortunately, the commodity exchange in the last couple of years, has been suffering. Before the current administration, what has happened in the past is, an issue between the Ministry of Trade and the Ministry of Agriculture. Each one of them wants to take ownership. But I think now things have been sorted out. I'm told that the NSIA is ready to invest in the commodity exchange. FS 2020 is also keen in looking at ways and means that they can revitalize the commodity exchange. I think government should take very seriously the status of the commodity exchange. I believe that the government policy in terms of diversification can be better achieved when you have a commodity exchange, because for the farmer, he is looking at value for his goods. He is looking at better price, and the only avenue that a farmer can get better value for his price is if you have an exchange. And more importantly, you'll be able to have issues to do with standardization, quality control, and whatever. You can only achieve that through the commodity exchange. And now that we are driving through exporting commodities, the best way that you can ensure that standardization is achieved, quality is maintained, is when you have a platform like a commodity exchange that has all these features that can look at the quality of the goods. If they are no good, they will tell them this are the sort of quality that is required. I believe that's the better way to do it, especially now that the message government has been sending about people going back to farming. A lot of people are happy with it. I went home yesterday and I just saw my painter, the guy that comes to paint my house, and I asked him where has he been for the last 3-4 months. He said he went back home, he went into farming. I said, oh, that's good. He said, yes. I said, how many bags of rice? He said he was able to harvest 18 bags of rice and 22 bags of maize. So I asked him, are you going to sell them? He said, no, he's only going to sell a little of it and then buy fertilizer for the next year. His expectation is that next year he's going to harvest more than that. And if you look around, you see that the price of farmland has gone up by over 200%. So the only way we can build on some of the success that has been achieved if we have a very thriving commodity exchange. And I think with the initiatives taken by NSIA and FS 2020, I hope and pray that before the end of this year, we'll have a very good commodity exchange that we can say this is equipped to drive our commodity market.
Let's return to the issue of market regulation, supervision, with this time around the platforms, the Nigerian Stock Exchange, the NESD, and partly FMDQ, OTC, Securities Exchange. Give us a view of what supervising, having more platforms to supervise, has it brought for you? For decades, it was only the Nigerian Stock Exchange. Now you have 2 other platforms that are not just licensed and registered, but are also in some form of activity.
It's very interesting, Bosun, very, very interesting, because you can clearly see competition. You can clearly see what the economics says competition bring in value. You can see now stock exchange is looking inwards. Stock exchange has not come up with certain rules that if you are going to list your instrument on stock exchange, this is the fees you're going to pay. And if you are going to list on both exchanges, this is it. So it's all about competition. And each one of them is fighting to get more mandates. Each one of them is fighting to see that certain securities have been listed. I've seen FNDQ has also hooked up to your platform as well. Just like how you cover the stock exchange, you also cover FMDQ, which is very good. And that's our thrust, and that's why we register any company that wants to have an exchange as long as they have made the necessary requirement, because that is what would engender efficiency, that what will engender competition. And we have seen that between the stock exchange, the Nigerian Stock Exchange, and the FMDQ. And I think in the next 3-4 years, especially the fact that FMDQ seems to be more focusing on the fixed income securities, while the NSE is focusing more on the equity. By the time we move in the next 2-3 years, I see some of them converging together, converging in the sense that both of them would focus both, with the fixed income and the equities as well. The Nigerian Stock Exchange would also do that. So this is very good. We're happy to see that the encouragement we have given to FMDQ is actually yielding a very, very positive return. You see most issues now, they list both in the FMDQ and the Nigerian Stock Exchange. In terms of
some of the issues that you met at the marketplace when you took over as the head of the SEC in the days of the market boom, 2004, 2005, 6, and 7. Are there some of these leftovers that you are focusing on right now that have been brought to your attention that you think requires resolution, as it were, for investors?
No, the only thing we have been focusing on, which we believe, the investor has been complaining about. What we did was, when we came in, we didn't start going to be calling investors to come back to the market. No, but we identify some of the concerns of the investors. So, for instance, an investor will tell you that I have been investing for the last 5-10 years, I have not been collecting my dividend. So that's why we brought in the e-dividend mandate, such that once you hook onto the e-dividend mandate and a company declares dividend, it will be paid directly into your own account. 2, we also look at some of the problems they've been having in terms of verifying their shares. Verification takes 6 months, 9 months before your share certificates are verified. And that's why head-on we work towards the dematerialization. So any investor in Nigeria now that you have a record of investment with the registrars, those investments are already captured in the CSCS. So if you want to sell your shares now, all you need to do is to inform your broker, and those shares will be sold. Thirdly, we also realize that some of the problems that investors will be having is their shares have been sold, there are either delay or non-remittance of their proceeds. Now that's why we also introduced the direct cash settlement, which makes it mandatory now, because we're now trying to make it mandatory that once your shares are sold, the proceeds will not be credited directly into your own account. Now, that's the beauty of e-dividend, where each investor now is going to have his own data with the CSCS, with the BVN. So the moment your shares are sold, they'll be credited. And that's our approach. So rather than going back to the investor and say, come back to the market, we now look at the investor, what are your issues? What are the problems? What are your concerns? Once we address those concerns, then we cannot go back. And that's why we also came up with the National Investor Protection Fund, where we're able to pay over 500 investors that lost their money. Again, it has given some comfort to some of the investors. So these are some of the information that we've had in the last 30-40 years, and that's why, like I said, we are not going to do what has been done before, which is call people back but address them. And I think it's yielding positive returns. People are happy, but we expect a lot of patronage from investors, given that some of these concerns, have been addressed.
On a final note, you and the central bank and I think NIPS were able to resolve one of the most difficult issues in Nigeria's capital market for more than 30-40 years, the issue of not being able to pay dividend warrants into savings accounts, and that looks like a major resolution there that you've been able to achieve while you're here at the SEC. What has been the reaction from retail investors? Perhaps some of them have called you and said, thank you for getting this solved for us.
Oh, absolutely. A lot of people were happy because in the past, you cannot pay your dividend into your savings account. And for 2 years, we engaged CBN. I actually chaired that committee. And I'm happy to say that CBN has given us all the support. And CBN see the spirit behind it. And they were able to accede to that request. So as of today, you can pay your dividend warrant into your savings account. Although we have given instructions that by June this year, there won't be issuance of dividend warrant any longer.